Good morning. This is Chris Robinson, Robinson Ag Market, with today's pre-opening grain and livestock comments for Tuesday, August 26th, 2025. 4 cent range and and corn last night. We're sitting basically unchanged, down a half cents, 4.11 and 3/4. We did have a good bounce yesterday. We did have some surprisingly good wheat exports. Um, Although one good week, we need 12 weeks of that, not just one good week. But it's a start. No surprise with wheat at 5-year lows that people were coming open their checkbooks. Um, but again, overnight, even the wheat was unchanged. You got December, Chicago sitting at 5.31 and a quarter, up a penny and a half. December KC down 3/4, 5.20. Back to the corn. These corn trading at 4.11 3/4, down a half cent. Spot corn. A quiet night last night. A high of 92, a low of 80, 87 and a half. Not much going on. We didn't get any surprises from the crop progress. The temperatures are cooler and drier for the next 10 to 15 days. So that for people that were looking for high heat to continue to take some of the yield off, I don't know if that's going to unfold. But we have had a good bounce. We did get a good bounce. These corn gave us a bounce from 492. Yesterday's 1 month high, which was 416 and a half. So, are we ever going to go fill that gap from July 4th weekend? I hope so. This may just be another rally and a downtrend, which basically started in February. I'm looking at the chart right now. We've had one, two, three, four, five, six, about a half dozen little bounces where people get excited and think, well, maybe the lows are in. If I am long corn without a floor, I'm using that rally to get some downside protection. I can't say it enough. We don't want to be looking at sharply lower corn prices and not take advantage of these bounces. Setting a hedge on a 20-cent bounce is not getting bearish. Okay, I mean, I'm just letting you know what we're trying to do is capture as much of the revenue as we possibly can. There is a possibility that something changes, especially in the next USDA report, and we could get continued short covering. But as time goes on, as the crop comes in, we have less and less arrows in our back pocket that we can pull out and take shots with. November beans did come back a little bit last night. We had an 11-cent range overnight. Actually, yeah, closer to 13 cent range overnight. We're up 6 cents at 10.53. That's probably going to be the fighting zone here for the next couple days, this 10.50 level. I would be surprised, for what it's worth, if we don't retest the 10.74 level. Um, the recent high on Friday, looked like we were going to take a shot at it. We got to 10.62, 62 to 75. 13 cents of the beans is not very, very much, but it's going to be a key technical level, not only for the chart people, but also for producers. You go all the way back to October of 2024, and we failed there quite a few times. We failed in October. We failed again in February. We failed again in June. So hopefully, August, hopefully if we pop above 10.75, then the beans may have a story there, which is very, very odd because the Chinese are basically still sitting on their hands. They have not bought one new crop bushel from us at all. Typically, they buy about 500 million in the first quarter alone. And until we get that trade deal done, people are going to be concerned about that. Now, when and if the trade deal does get done, then we'll probably have a different story. There was some news headlines yesterday that there was some progress made, or I could call it progress, but the President Trump said that he'd allow more Chinese students to come in. So I hope in return they get some sort of a quid pro quo where they come back and buy our beans because American farmer, for decades China's taken 25% of our bean crop. You can't have that demand fizzle away. You just can't, and not have a material impact to producers. Moving on to what we're looking at today for the cattle. Are we going to make new highs? Are we overdone? Are we going to have a correction? Yesterday was pretty interesting. We had the screwworm issue once again. We opened up hard low. It looked like they were going to pound on it. and we were able to come back. Typically, when a market gets bad news like that and shakes it off, that's a sign that there's underlying strength. Don't fight what Mr. Market's telling you, despite what the headlines might tell you. But that was a pretty big range yesterday. Um, if you look at the October fats, we had a high of 237 half, a low of 233 half. If you look at the feeders, a high of 262 half and a low of 250, 362 half and a low of 354 low. So that's a pretty good trading range. I wouldn't be surprised to see more of those trading ranges. So from 54 to 62. $8. Are we gonna have $8 trading ranges every day in feeders? It feels like we might for a while till we get a better handle on what's going on with this continued demand story. The American consumer continues to buy expensive beef, and cash market continues to go higher. And now the Packers are back in the red. So they have been in the black for a while. Now they're back in the red. So kind of throw some more fuel on the fire. So we'll see what happens today. I would use these rallies in the grains to my benefit, whatever that means. Um, we've got a long way to go before this crop's in the bin. This is Chris Robinson, Robinson Ag Marketing. If you need help, give me a call, 312-638-8868. Talk to you soon.